Okay, yesterday I was explaining debtors account. What is debtors account? Why we have to prepare the debtors account and how to find out the missing information from the debtors account. And someone disturbed me and I stopped there. So today I will start from the starting itself. Debtors account meaning already explained one. Then we see the debtors account format. Okay. Debtors account means asset account. Whatever items increase the debtors comes on the debit side, and whatever transactions decrease the amount of debtors comes on the credit side as per your accounting rule. Remember this. Increase in the debtors means asset increase. Debtors account is asset account. Increase in asset comes on the debit side. Increase in the decrease in the asset comes on the credit side. Credited. Okay, asset account is credited. Therefore, you have to pass the or post the items. First, we write the balance brought down. Debtors account always shows debit balance, so you take the balance. And second, the bills receivables dishonored. Whenever the bill is dishonored by the debtor and the debtor's balance increases, bill is dishonored. Whatever bill already given, that bill dishonors, then there is a increase of debtors. And third is credit sale. If you make the credit sale to the debtors, your customers, automatically customer balance increases, debtor balance increases, credit sale. Okay, these are the three items. Increase is the debtors, that is the asset balance. So you take these three items on the debit side. And on the credit side, you have to write the items or transactions which decrease the debtors balance, means asset balance decreases. If the debtors balance decreases, that is to be credited. Debtors account is credited by concerned account. Okay. So cash and bank. I have taken the 2 points in the single line. Cash bar bank means cash received from debtors. If cash is received from debtors, debtors balance decreases. Cash received from debtors means by cash. And if the check is received from the debtor, you write as by bank. For check received by bank, cash received by cash. The next is discount allowed. Whenever you allow the discount, the debtor's balance decreases and expense balance increases. So, as per the rule, you have to pass the entry. Discount allowed to debtor is expense, expense increases and debtor decreases. Okay. Second item. It is the third one. First is cash received from the debtor. Second is check received from the debtor. Third is discount allowed to debtor. And fourth is bad debt. Suppose any debtor or the person purchased on the credit fails to pay the dues and that cannot be recovered in future also. That is called as bad debt. And that bad debt is also decreases the debtor's balance. Bad debt. Fourth one. Fifth is sales return. Whenever the debtor returns the goods already sold by you people, whenever the debtor returns the goods, that is called as sales return, decreases the debtor's account. Therefore, it is taken as sales return. Then bills receivable. If the debtor gives bills receivable instead of cash or check, a debtor gives the bills receivable, then you record as bills receivable. Okay, this also decreases the debtor's balance. The next is allowances. If you give any allowances to customer, to the debtor, that is recorded on the credit side. Allowance given to customer. Then lastly, you write the closing balance of the debtor. Closing balance of the debtor at the last. Okay, these are the items you have to write on the debtors account credit side. Debit side, 3 items, credit side, round about 1, 2, 3, 4, 5, 6, 7, 8 line, 8 items. You write 8 items on debit credit side, 3 items on the debit side. Then you take the total. If there is a difference, in the debit side, that may be opening balance or it may be credit sale. Remember this. If there is a difference, the difference may be credit sale or opening balance. First, it is credit sale. If credit sale is given in the problem, then it is a balance, opening balance. It is the debit side difference. If the difference is on credit side, it is balance carried down. If balance carried down is given in the problem, then it is cash or bank. Remember this. These three are the main missing information. Opening balance may be missing, credit sale may be missing, cash or bank may be missing, and closing balance may be missing. On the basis of debtors account, you prepare the debtors account, take the total of the debtors account. If the difference arises on the credit side, it may be closing balance. If closing balance is there, then it is a cash or bank. And if the difference is on debit side, it is credit sale. Difference is called as credit sale. If credit sale is given in the problem, then it is a opening balance. Okay. And its related account is bills receivable account. Bills receivable account is to be prepared simultaneously. It is linked with the debtors account. Therefore, in the debit side, you start with the bills receivable opening balance. You start from the opening balance. Okay, opening balance. Then secondly, buy to sundry debtors account. Means opening balance you take. Secondly, you take the bills received from debtors. It is a posting. It is already shown in the credit side of debtors account, bills receivable. Credit side of bills receivable, credit side of debtors account, bills receivable comes on the debit side of bills receivable account as sundry debtors. Okay. You see here, this bills receivable comes to sundry debtors here. This is the point you remember. If this amount is calculated, you go to above. You come from the debtors to bills receivable or bills receivable to debtors. This is the point you remember. Okay. And bills receivable dishonored. Bills receivable dishonored comes on the debtors account debit side, and that same comes on the credit side. You remember this. Okay. I'll show this one. Debit side to balance brought down. Second point, to debtors account. To debtors means bills receivable received. You remember this. Bills receivable received. You take from the debtors account or directly take. And last, in the credit side, you take by bank or cash. Cash means cash received on bills receivable on maturity. And bank means check received on maturity of bills. Remember this. And secondly, debtors account. That is bills receivable dishonored. Bills receivable dishonored record as by debtors. And you close the account and ascertain the balance. Okay. Close the account, ascertain the balance. These 2 points. The bills receivable account is mainly opened for the purpose of finding the bills receivable received, or for the purpose of bills receivable dishonored, or for the purpose of calculating the opening and closing balance. Okay, this is the point you remember. Okay. Then one more thing you remember. The opening balance goes to opening balance sheet. Remember this. Closing balance goes to closing balance sheet. Opening balance goes to opening statement of fair. Closing balances goes to closing balance sheet. Remember this point. These are the important points you remember. And whatever cash is here, cash goes to cash account. Next account is total creditor account. Why the total creditor account is prepared? Total creditor account means it is the account of a consolidated account of credit sale made to the credit purchase made from the suppliers. Credit purchase made from the suppliers, and this account is prepared to find out the credit purchases. This account is prepared to ascertain the amount of credit purchase or closing balance of creditor, opening balance of creditor, cash paid to creditor, or bills payable issued to creditor. Bills payable issued to creditor. To find out these things, we prepare the creditor account. 2 marks question may come on this. Why creditors account is prepared? Creditor account is prepared to ascertain the amount of credit sale. It is prepared to ascertain the credit sale, and it may be prepared for closing balance of the creditors or cash paid to creditors or amount of bills payable issued. Okay, this is the creditors account. And what is the format of creditors account? Creditors account is the liability account. It is a liability account. So increase in liability comes on the credit side. Increase in liability credited. Therefore, whatever items increases you write on the credit side, and decrease in the liability comes on the debit side. Whatever items decrease in liability comes on the debit side. Remember this. So buy balance brought down. You take the balance first, balance brought down, and bills payable unpaid means bills payable dishonored. Second point. And third is Mr. RK, you call me afterwards. You call me at 2:30. Balance brought down this bills payable dishonored or unpaid. Bills payable unpaid. And third point is credits purchase. This is the third point. These three items comes on the debit side, credit side. These point increase is the creditors. Opening balance of creditor. If bills payable is unpaid, you record on the credit side. Credit purchases comes on the credit side. These three items. Then whatever the creditor balance decreases, all those items comes on the debit side. First is cash or bank. Cash paid to creditor. Check issued to creditor. Cash paid to creditor. Check issued to creditor. Cash paid, you record as cash. If check is given, you record as bank. Okay, write the amount. This is the first one. If the cash is paid to creditor, automatically creditor balance decreases. Then discount earned. If the discount is given by the supplier, that is called as discount earned. You record the discount earned on the debit side. Next, you write purchase return. If you return the goods purchased, purchase return decreases the amount of creditor. Purchase return comes on the debit side. Then bills payable issued to creditor. Bills payable issued to creditor. Remember this. Bills payable issued to creditor. Next, allowances given by creditor. Allowances given by creditor. Next is the balance. Next is the balance. You write the balance. These are the items coming on the debit side. Okay. Remember these three items, credit side, roundabout. In 6 items, debit side. Okay. You write these items, then close the account. Okay, this account must tally. This must be tally. If there is a difference on the credit side, if the difference is credit side, that difference is the credit purchase. They will not give credit purchase. Okay, if they will not give the credit purchase, you write as credit purchase difference. Otherwise, it is a opening balance. Okay, if the difference is on debit side, then it is the closing balance. Closing balance difference you write as closing balance. If closing balance is given in the problem, then cash paid to creditor. You write as a cash paid to creditor. Okay, this is the point you remember. And its related account is bills payable account. You draw the bills payable account. Bills payable account is related with creditor account. Okay. So bills payable is also liability. Increase in the liability comes on the debit side, credit side. Increase in liability credited, decrease in liability debited. This is your rule. Okay, buy balance brought down, it is the opening balance of bills payable. Next, buy creditor. Buy creditor means bills payable issued. Bills payable issued. This comes from the creditor's account. Remember this point. This comes from the creditor account. You see here. Here is the bills payable. This bills payable comes to bills payable account as by creditor. By creditor. Remember this. Okay. And next, this bills payable unpaid comes on the debit side. Debit side. You may come from the creditor to bills payable, or you go from the bills payable to creditor account as per the given information. Okay, these two are the points you remember. Okay, two items on the credit side. Debit side, cash paid on bills payable. Bills payable discharged comes on the debit side. And bank means check issued for bills payable comes on the debit side. Then creditor account. This creditor account is nothing but bills unpaid from the credit side of the bill creditor to debit side of bills payable account. Close the account, ascertain the balance. Credit side, debit side, two balance carried down, closing balance. You take the total. You take the total of bills payable account. It should tally. If there is a difference, the difference represents by creditor account. By creditor means bills payable issued. From this bills by creditor to you go to creditor's account as by bills payable. Okay. This account is prepared to ascertain the bills payable issued or closing balance of bills payable. This is the point, remember. And opening balance is goes to opening statement of base. Remember this. From these two accounts, opening balance goes to opening statement of base, closing balance goes to closing balance sheet, and cash goes to cash book. These are the 3 points you remember regarding this. This is called as total creditors account. Okay, total creditors account, total bills payable account. These are to be prepared. Next is cash book. You have to prepare the cash book. You have to prepare the cash book based on the given information. Okay, cash book is to be prepared for the purpose of ascertaining. Cash book is prepared to ascertain the cash sale, cash purchase, opening balance of cash, closing balance of cash. These are the four important aspects. Okay, along these four, another two are there. This is prepared to ascertain cash paid to creditor or cash received from debtor. Okay, I'll tell you after preparation. Okay, this cash book is prepared to ascertain the missing information. Missing information. You see here, two balance brought down. Two balance brought down. You write in the cash column and also bank column. Two balance brought down. Two balance brought down means cash in the bank, and if there is a cash, you write in the cash column also X mark. I have not marked in the cash column. No problem. I'll mark that. Two balance brought down. You write cash balance in the cash column, bank balance in the bank column. It is the first point. And then you write cash sales. Okay, cash sales. Before that, you see here, all the receipt of cash you record on the debit side. If cash comes to you, people, cash and checks received, debit side, receipt side record. If payment of cash or issue of check, payment by check, payment by cash, record on the credit side. This is the important point you remember. Okay. Then cash sales. If sales are made and cash received, you write in the cash column. If check is received, you have marked it in the bank column. Remember this one. Cash sale. Cash sale may be in the form of check or in the form of cash. Cash column, check in the bank column. Okay. The next is bills receivable. If cash is received on bills receivable, if bills receivable matures and cash is received on bills receivable, you record in the receipt side. It may be recorded in the bank column or it may be recorded on the cash column. I have taken some items in the bank column and some items in the cash column. Okay, if cash is received, you record in the cash column. Check is received, you record in the bank column. Remember this point. Okay, then debtors. Debtors means cash received from debtors. First cash received from cash sale. Second cash received on bills receivable. Third we receive cash from the debtors. Okay, cash received from debtors. Then cash received in the form of additional capital. Additional capital is also cash received. Then miscellaneous receipts. Miscellaneous receipts. These are the some receipts of cash. Okay. These are the some receipts of cash. Remember this. And buy balance brought down. What is buy balance brought down? You remember this point very carefully. Buy balance brought down is the bank overdraft shown in the liability side. Opening balance of bank overdraft comes on the credit side of the bank column. In the bank column, it comes on the credit side. Remember this, buy balance brought down only comes on the bank column, credit side, not in the cash column. It is bank overdraft. Remember this point. Okay. If there is a bank overdraft, you write buy balance brought down. If there is a bank balance, you write to balance brought down. Okay. Then cash purchase. If you purchase goods on cash base, payment is there. So you record bank in the bank column. If check is there, bank column, cash is there, you record in the cash column. Then creditors. Creditors means cash paid to creditor. Creditors means this is cash paid to creditor. Then next is cash paid on bills payable. Cash paid on bills payable. Cash paid on bills payable. Next, wages paid. Then salary paid. Next, advertisement expense paid. Next, drawing. This is very important. Drawing. Drawing may be made by the owner directly for his expenses, his enjoyments. Okay. So, drawing may be related to household expense. Any type of household expense is given in the problem, you consider that as a drawing. Okay. And family expenses given in the problem is treated as drawing. Second point. Personal expense of the owner. Personal expense of the owner is given in the problem, you treat as a drawing. Okay. These are the drawings. For example, household expense. Household expense means the Kirana bill paid. Kirana bill paid. This is household expense. Family expenses. Purchase a scooter. Purchase a motorcycle. Family expense. For son. Daughter marriage expenses. Personal expense. Like this, household expense, family expense, personal expense, you record as drawing. Okay. These are the expenses you have to write. Then there are two contra entries. There are two contra entries. One is cash received from the bank. One is cash withdrawn from the bank. Another is cash deposited in the bank. These 2 points you remember carefully. Cash received or cash withdrawn from bank means it is cash is received from bank means it comes to cash column and there is a payment to the bank column. Okay, you see here. To cash means cash deposited in bank. Cash deposited in bank is there. You write to cash and write amount in the bank column. So there is a receipt to the banker. Cash deposited into bank. Cash deposited into bank. Repeatedly I am telling. Cash deposited in bank. You write debit side to cash and amount in the bank column. And it is to be made contra entry. Contra entry means opposite side, opposite name, opposite column. Opposite side, opposite name, opposite column. 3 points you remember. Okay. So opposite side means credit side. First point. You have to write. Opposite column. Here amount is in bank column. Here I record the amount in the cash column. Opposite column. Opposite account. Opposite name. Here is a cash. You write here as a bank. 3 aspects you remember regarding the contra entry. This is called as cash deposited in bank. Okay, cash deposited in bank. Then cash withdrawn from the bank for office use. Cash withdrawn from the bank for office use means cash comes to office. Cash comes to office, therefore you write on the debit side to bank and amount in the cash column. Cash received. It is cash withdrawn from the bank. Cash comes to office. There is a receipt to cash column. Okay. It is received from the bank. It is contra entry. You have to make it contra entry. Cash received or cash withdrawn from bank for office use. Okay. 3 points. Opposite side, opposite column, opposite name. Use here. Opposite column, opposite side. Here is in the cash column. Here is in the bank column movement. Then opposite name. Here is bank. Here is cash. Okay. These two are the first example is related to cash deposited in bank. Second example is related to cash withdrawn from bank for office use. Contra entry. How to make the contra entry? I explained. You go through the video once again and you will come to know how to make the contra entries. Okay. And after this, you close the account, take the total. Then whatever balance comes, you write as a buy balance carried down. Buy balance carried down, it is the closing balance. It is the closing balance. Okay. Like this, you have to prepare the cash book. Okay. If amount is received in cash, you record in cash column. If amount is received in check, you record the amount in the bank column. If payment is made in cash, you record in the cash column. If payment is made by check, you record in the bank column. This is the point you remember. Okay. Then you remember something about the contra entry. Then take the total. Okay. If the bank balance comes on the debit side, that is 2 balance carried down. You write 2 balance carried down, that is bank overdraft. And if the balances are on the credit side, balance carried down, it is nothing but cash in hand, cash at bank, closing balance. Okay. Like this, you have to prepare the account and close the account, cash book, then find the missing information. If the missing information difference is in debit side, it may be opening balance. It may be opening balance, or it may be collection from debtors, or it may be bills receivable, cash received on bills receivable, or it may be cash sale. If these 5 items, balance brought down may be missing item, cash sale may be missing item, bills receivable may be missing item, debtors may be missing item, fourth one. And fifth is miscellaneous income. All the 4 are given. If all the 4 are there, then you call it as a missing miscellaneous income. This is the point you remember. And regarding credit side, if the balance is on credit side, difference is on credit side, it is called as cash purchase or paid to creditors, paid on bills payable, or it is the closing balance, And from this account, opening balance goes to opening statement of his, closing balance goes to closing balance sheet, bills goes to bills account, debtors goes to debtors account, creditors goes to creditors account, then bills payable goes to bills payable account. This is the point you remember. And time up. I will see the remaining in the next class. Thank you.